Just before his inauguration in January 2017, President Donald Trump remarked that the dollar is getting too strong. This statement marked the start of a major dollar crash, which fueled one of the largest macro moves and triggered a face-melting rally for risk-on assets. Trump declared on Tuesday that interest rates are too high. I'm sure you can guess what comes next. While yesterday's Bitcoin crash certainly caused some concern, I recommend focusing on the bigger picture. In this video, I'll break down the reasons behind the current dump in simple terms. I'll also share some macro data that seems a bit concerning, along with some data that points toward a potential god-tier alt season. As always, support the channel by hitting the like button. That's all I ask for the hours I spend researching to bring you quality content. Share it with your friends too, as many are uncertain and worried about the current macro events. Alright, let's get started. Bitcoin's recent dump can be attributed to several factors. One key reason is that recent economic reports came in hotter than expected, similar to the period between July and October 2023 when Bitcoin faced similar challenges due to rising yields. The rally in long-term yields is partly due to stronger than expected job openings. Here are the numbers. Actual job openings were 8 million, higher than the 7.74 million estimate and up from the prior 7.8 million. This is the highest level since February 2023. Additionally, the ISM prices paid index came in hotter than expected. The actual reading was 64.4, significantly higher than the estimate of 57.5. This is also an increase from the prior reading of 58.2, reflecting rising costs for goods and services. These numbers suggest a stronger labor market and higher prices, making investors wonder if the Fed may have cut rates too soon. This is bearish for Bitcoin because it signals the possibility of tighter monetary policy, meaning higher interest rates. When interest rates rise, investors tend to move towards safer, yield-generating assets. This shift puts pressure on risk assets like Bitcoin. At the same time, a stronger dollar amplifies the impact. It makes Bitcoin less appealing to international buyers, further weighing on its price. Given this environment, it's also becoming less likely that we will see quantitative easing this year, which reduces the chances of an altcoin season like the euphoric run in 2021. It is clear that we would need a weaker dollar and quantitative easing to see a proper alt season. But the debate over whether Trump can manage dollar devaluation and bring in quantitative easing is a common topic. Many skeptics argue that the Federal Reserve, led by Jerome Powell, has complete control over monetary policy. However, the reality is more nuanced. While the Fed operates independently, the president can still sway key aspects of the economic landscape. Here's why Trump could still steer the ship in his favor when it comes to the dollar and QE. Trump's influence on monetary policy. While the Federal Reserve is technically independent, the president can still exert pressure. Trump has shown time and again that he's not shy about publicly criticizing the Fed's policies. Just recently he said that interest rates are too high. By continuing to voice his stance, Trump can push for policies that suit his vision of a weaker dollar and economic stimulus. His influence can sway public opinion and indirectly pressure the Fed to consider QE if the economic conditions call for it. Appointments and Fed leadership. One of the most significant ways Trump can impact Fed policy is through his ability to appoint board members. Although Powell is currently the Fed chair, Trump has the power to nominate future board members who align with his economic philosophy. If the Fed's leadership shifts, it could pave the way for a more accommodative stance on monetary policy, including the introduction of QE to stimulate growth and lower interest rates. There is also talk of Trump declaring a national economic emergency and imposing significant tariffs on allies. This could be bearish for the US dollar as global investors might abandon it. On the flip side, this could trigger a rally in risk assets. In conclusion, while the Fed technically controls monetary policy, Trump still wields significant influence. His ability to shape economic policies through his public stance, appointments, and political pressure is significant. This makes it possible for him to push for dollar devaluation and QE. Will he succeed? I believe he will. He has done it before and he will do it again. Should you be worried about short-term pullbacks in crypto? Absolutely not. The Trump pump is imminent. Altcoins will go to the moon while the money printer goes. I'll see you in the next one.